Welcome back to my channel, everybody. Thank you for tuning in. And this video is going to be a good one. It's going to be based off of support and resistance. I know a lot of people are questioning, is support and resistance similar to the supply and demand strategy that I use? And the answer is no. And in this video, I'm going to go into detail, going over the basics of support and resistance, what I think of it, and how it's really completely different than what supply and demand is. I'm going to break it down, and I'm also going to show you real chart examples and just comparing the two. And if you do not know supply and demand, but you do know support and resistance, and basically how that's a disadvantage to your trading. But before I begin, I'm just going to introduce my Instagram like always. If you aren't following this, I post daily trade recaps on a daily basis. I post some good options trading tips or tricks. The link to this will be in the bio or in the description below. Definitely worth a follow. So without further ado, let's get right into the video. So support and resistance is pretty much a tool that every technical trader knows, whether you're talking about a candlestick chart, bar chart, whatever the case may be. Support and resistance is the number one tool, the number one term that I know a lot of traders do use. Whether support and resistance could be a high, a low, pre-market high, pre-market low. It's just an area on a chart for support where price could not move below after multiple attempts, or even could be a single attempt. It just acts like a floor. So support is basically a large buyer, and the key with this is that it's an exact level that acts like a floor where price cannot break below. Same thing with resistance. Resistance is an area on a chart where price cannot move above after multiple attempts, or in this case too, a single attempt, and it acts like a ceiling. So resistance is the ceiling, support is the floor. And basically what resistance is basically a large seller at an exact price point acting like a ceiling or a major wall that price cannot break through and price cannot break above. So support and resistance in summary is basically at an exact price point, whether you're talking about, the $200 mark, $200.10 mark. It's just at an exact price point where price cannot move above or below. And that is highly different than what supply and demand means. Yes, support and resistance could mean, there was a greater supply at a level or greater demand at a level, but that really does not include an imbalance. And that's basically what I'm talking about when I talk about supply and demand. So let me just show you really fast a couple support and resistance examples, and then we'll go right into the supply and demand. So here's an example of resistance, and this is on Boeing on a 1 hour chart at the $181.26 mark on August 25th, 2020. Price moved up, and that was the high on that day, and we sold off about 10 points from that high. 2 days later, price revisited that point. Boeing rallied, hit the $181.26 mark, and rejected for another 7 or 8 points to the downside. So this right here is basically a double top, and double tops, triple tops are going to be resistance, and double bottoms, triple bottoms are going to be support zones. And basically what resistance is a large seller that's basically acting like a wall or a ceiling where price cannot break through. So there could be a large seller sitting on the offer on the level 2, and if there's not enough demand, and demand is buyers to take us above that resistance point or that large seller, then that large seller is going to absorb all those orders. And if there's no demand, we're not going to break higher above that point. So what a lot of trend traders are going to do is they're going to mark this level on their charts, and they're going to say, hey, we have resistance at 181.26, and if we get above this, I'm going to buy the breakout above in speculation that we're going to continue higher. We're going to break the top. We're going to start making higher highs, and the trend is going to continue to the upside. Personally, this is not how I trade. It's important to understand support and resistance because with supply and demand, it's a very powerful tool if you understand how traders are trapped and basically how the market needs liquidity, where a lot of retail traders do trade. So like I said, is the number one most common used tool, in my opinion, is support and resistance, a trading tool. And if everybody's doing it, and it's basically going to be a big liquidity pool for these institutional orders, which I'm going to explain with the supply and demand strategy. So really fast, here's another example on Boeing, and this is a support zone. Price came down, hit this mark, and then maybe a week or two later, we came down, hit that same support mark. The next day, hit the same support mark and closed above it, could not close below it. Now the next day, what's going to happen is if I extend this support zone at the $168 mark and 88 cents, the next day we broke below it. Now, if I go to a smaller time frame chart, let's just say a 15-minute in this case, Let me turn pre-market data back on. I only turned it off just to illustrate that, and there was not going to be as much noise. Here's our support line. We opened up below it, and a lot of traders now are going to say we're opening below support. I'm going to take this thing short, and we could really sell off because there's nothing really stopping us to the downside. Now, let me find this back, the support zone. You could have got 2 points out of this break below support if you're chasing it to the downside, if you're a breakdown type of trader, because obviously now we're below support. But if you do not know supply and demand, this same exact chart, I'm going to show you an example of how to use it with supply and demand. And basically it's going to change your whole outlook on the market if you really are only trading with support and resistance zones. So this is where it gets interesting. Supply and demand are zones. It's basically an area on a chart that has a high probability of where the market can turn. So this is the key point. There are zones and just areas that serve high probability areas of turning points of the market. A supply zone is an area on a chart where there is a sell order imbalance. And what I mean by this is that basically when price moves to the downside aggressively, that's creating a supply imbalance because all orders are sitting on one side of the market. And because of that, it caused a major imbalance. Think about it. If everybody's slamming the bid, everybody's short and wiping away all the buyers, wiping away all the bidders, that's going to cause a major imbalance. And that's going to leave major supply at those levels. And that's going to leave unfilled orders that did not get filled the first time, that weren't aggressive, but they were passive. So that's for supply. Now, demand is an area on a chart where there is a buy order imbalance. If price is shooting straight up to the upside, that basically means that you have aggressive buyers hitting the offer very aggressively. And all of those orders, since they're hitting the offer, because price obviously rose up to the upside aggressively, fast, violently, that's going to cause an imbalance. And because of that imbalance, we have now a demand zone. And at that imbalance, we're going to have orders that did not get filled the first time. And they're basically going to be sitting there as passive orders because of that imbalance that was formed by more aggressive orders that hit the market. So this is the same support zone on Boeing. We hit it this day, the next day, and then the following day, when we opened below it, we did sell off. Now, this is what's interesting. If you understand the supply and demand strategy, you would have realized that we had a demand zone right below the support zone. So at the time we did open below support, this white line, this thing did look good to the downside. Heavy volume, looked very bearish in the first two 15-minute candles. But because I know we are in a demand zone, I am not shorting this market because demand zones serve as high probability areas where the market can turn to the upside because of an original existing buy order imbalance. So I'm never shorting a market breaking down below support. It's my favorite setup when we break below a low a day, when we break below a support zone, and we're inside demand, when everybody is shorting the market thinking it's going to continue to the downside, when in reality we're in demand, and this is an area where the market has a high probability of reversing to the upside. So this is a 15-minute demand zone. And like I said, you can see different stories on different time frames. I have a video on the best time frames to use and how to spot zones and how to draw them on different time frames. But this is basically a 15-minute demand zone that formed on August 5th. And we broke below support, hit the demand zone, and bounced right out of demand. A lot of traders would have got screwed shorting this below support. And then we did bounce immediately for about 6 points to the upside. So now this is how it differs from support and resistance. So when we talk about demand, it's really comparable because I know a lot of people think about it as support, but it's really not. If you want to mark out this area where price bounced on Thursday, you wouldn't have been able to find a support mark. We actually did break below the pre-market low, which is support, but we came down into a 2-hour demand zone. And nowhere on this chart you're going to be able to find support if you do not understand what supply and demand is. So if I go to a 2-hour chart, and I'll show you what I found in that zone, we found this candle right here, which basically qualified us as that 2-hour demand zone and has no similarities to support. It's completely different. It's not based off of a single line, single support or resistance line. It's basically based off of that candle and basically an order imbalance, which caused this massive rally from 3464 all the way into 3497. So that was where price bounced on Thursday, was this 2-hour demand zone. Now here's another example on QQQ, and this is a 3-hour supply zone that was formulated on the NASDAQ future /NQ. And then I just go to QQQ and basically trade the options off of it. But we had resistance. Price moved up once, twice, failed at that level. Then price opened up at 9:30 Eastern. And, we didn't hit the resistance point until about 10:50 where we broke above it. Now, a lot of traders, like I said, are buying breaks above resistance. They're buying high day breaks. But if you don't realize we're inside of a supply zone, that is a major, major trap. Look at that volume that came through once we broke above high a day. This is really why, another reason, volume is an important confirmation, and higher volume sometimes will mean reversals, because in the market, for every buyer, there's a seller, and for every seller, there's a buyer. So if we break above high a day and you see high volume coming through with no follow through, and on top of that, we're inside of a supply zone, most likely that's going to be a recipe for reversal. And I actually did take this trade short once we broke above high a day and started moving down with confirmation, because we were in a 3-hour supply zone, and traders are taking this thinking we're going to continue to move to the upside. But in reality, we're in a supply zone where the market has a high probability of turning to the downside. So I hope you guys enjoyed this video. Like I said, support and resistance is very different than supply and demand. If you use the two together, it's going to give you a very good strategy. If you understand that retail traders are not the ones that move the markets, and basically these institutional traders are the ones that do move the markets because they trade with such large size that they cause this imbalance in the first place. So if you understand, and like I did say, for every buyer, there's a seller. For every seller, there's a buyer. If you understand where retail traders are buying at, they're buying basically above high a day. They're buying above resistance points. You have to ask yourself, who's on the other side of that trade? Who is selling to me when I'm trying to buy? And when you're shorting a support break or a low a day break or a triple bottom, you have to ask yourself, who is buying from me? If I'm shorting, there's got to be somebody that's buying my short. So you just have to put yourself in retail traders' position, look who's trapped, look who's hurting, and understand that supply and demand is what moves price in basically any market. They're just high probability zones and areas where the market could turn with very, very little risk. It's my favorite trading strategy, and this is basically how I trade on a daily basis with any stock and with any future. So hope you guys enjoyed. Drop a comment, drop a like, and make sure to follow my Instagram. The link will be in the description below. Appreciate it.